We are live. We're back for round two of two so far. So this is thanks for joining us, guys. We are joined again with Tom and Ves from Mortgage Tribe. Evening.
Evening, gents.
Hello.
And we are going to follow on from last week and go through what's going on in the market, have a bit of a chat. And if you've got questions, you're watching this now or later, drop them in the comments and we'll do our best to answer and come back to you. So we'll start with the first question, which you were just explaining before, Tom, and I have no idea what this means, but it sounds pretty cool. What's Nationwide doing?
That's a good question. Nationwide doing? These are an apostrophe and a capital N, but yeah.
Don't worry about the spelling. Don't worry about the spelling.
So they announced today a really interesting scheme that I can't really think of anything I've seen before, where they're effectively doing 0% fixed rate of 0% for was it 2 and 5 year Ves, or was it just 5 year?
2 or 5 year products.
Where they'll basically lend you interest-free money if you're borrowing for the purposes of what they call green purposes. So home improvements that are going to affect your EPC rating effectively. So, or things like solar panels, looking to get new double glazing, that kind of thing. Really interesting scheme, up to the maximum 20,000. They'll go up to 90% loan to value, which is really interesting. A lot of lenders won't go above 85. So that's really, really helpful for a lot of people trying to remortgage for home improvement funds. But obviously the big caveat is it's what they call green home improvements. We had a list up, didn't we, Ves? I can't remember what it was, but it's mainly things like solar panels and double glazing. I think they were the two most common, but what else was on there?
There was lots of little stuff. So they have the minimum is £5,000 borrowing. The maximum is £20,000. You have to already be a Nationwide mortgage customer, meaning that you have to have a mortgage with them already. And this would have to be an additional advance on that mortgage.
Yeah, so it's further.
So it's this additional advance that would be at 0%, either 2 or a 5 year fix, as Tom said. But there was some really interesting things. Some of them were, as Tom rightly mentioned, solar panels, which is a really good one in terms of getting your EPC rating up to an A or a B. It does a lot of heavy lifting. And then when you get into that A or B EPC range, you also unlock green mortgages for yourself in future, which tend to come with other perks, potentially a slightly lower interest rate or big cash back is another common one. One that Tom didn't mention that I found really interesting, and I know we had a bit of a chat about, is electric car charging points. Will be included. So although in itself it isn't going to go up to that £5,000, if you're thinking, right, we're going to get the double glazing done, and actually we're thinking about switching to an electric car, you can borrow the money for that electric car charging point at 0% if you do it across with the double glazing, for example, and it comes
it could be for multiple things, can't it?
So really, really interesting. One thing to note on that is that after that initial 5 year fixed period, that money would then go on to a different interest rate unless it's been paid off. But actually, if you're only borrowing a small amount, you could borrow that additional amount for only 5 years. So in 5 years, you pay it off and you don't pay any interest. So we really liked that, didn't we, Tom? We thought that was quite innovative.
I've not seen anything like it before. You know, basically handing out free money in terms of an interest point.
Yeah. Do you reckon anybody else would do it? Because I'm not with Halifax, unfortunately, but Nationwide. But
Nationwide have been kind of quite pioneering this year, I think, in terms of they were the first to come out with the helping hand scheme, helping first-time buyers by doing initially 5.5 times income, and now they're doing up to 6. They were the first to sort of come to the market with that, and then a lot of other lenders have started doing the same, like Halifax and Accord off the top of my head. So they're doing some interesting stuff, to be fair to them. It's going to be really interesting to see how, when their merger goes through a Virgin Money as well, because I've talked about, I think, on LinkedIn a bit, but they have two very different sets of criteria at the moment. So I'd be interested to see what sort of, if any, changes come up with that going forward, really. But it's a good merger, I think, the two of them. It's two big players.
And actually, on that note, now that you mentioned Virgin Money, Tom, and talking about innovative products, a little while back, they released a set of really interesting mortgage products where you get a 5 year fixed interest rate, but with a 2 year early repayment charge. And although they seemed quite expensive, if you compare them like for like with the 5-year fixed, actually when you place them with next to the 2-year fixed rates, they actually weren't bad. And there's some really clever stuff that you can do in the background, because that 5-year fixed allows the whole loan to be stress tested on a different interest rate, on a lower interest rate. So actually, I had a client who that was absolutely perfect for. It was exactly what was needed in that situation. So there is a bit of because interest rates have been quite high, there is a bit of a need for lenders to innovate in terms of the products that they provide. And that can sometimes be a little bit confusing. But if you have a chat with your mortgage advisor, there's some quite interesting solutions where you might not think there are at first.
Well, that's the key to it, isn't it? It's speaking to the people in the know, right? And getting yourself.
Yeah, and can we go slightly outside, think outside the box? Not we're never going to do anything dodgy, but it's, there are some solutions out there. You just need to find them and get the right advisor to help you find them, basically, and exhaust all the possibilities.
Well, on that note, that seamlessly takes us on to, I suppose, one of the other questions. So we'll go with this one next. If you're thinking of moving next year, what do you need to do? Now, we thought this was important because we know, Neil, don't we, that January is usually pretty bonkers. And I also feel like this period we're in now, the end of this year, the last quarter, has been a little bit different compared to others because of the budget and the change in government. So people are probably held back a little bit, and we might not have what we see as that busy period up until the end of November. So maybe it's going to be even busier in January. So for people who are watching this and going, I'm going to move in January, I'm going to sell my house or want to buy somewhere, what tips can we give them to make sure they're prepared? Because there will be, I think, a lot of people doing the same thing.
I think the key word is being prepared, isn't it? We always say that because you have so many people. I know you'll be the same, Dan, where people will call you panicking because they've found something, because obviously historically a lot more properties come available in January, and things start to pick up with available stock. So people will are more likely to see something, and then they're going to go, right, now I have to start from scratch. We say it throughout the whole year, be prepared, as in speak to obviously financial advisors, speak to an estate agent, get an idea of the process, the steps. We're very different to other estate agents, and we're very proactive, but obviously we've got a blueprint and a method to getting a property ready, which takes its time as well. So if you're thinking of moving and you're thinking, right, January is the time, then start to put the feelers out now, get the valuations, because I can't see the prices changing too much. Just see what happens, obviously, next week, but I can't see anything happening too drastically. But even so, if you've spoken to 2-3 estate agents and got an idea on the price, if you're happy and confident with that agent, then keep in touch with them. And then if things change, they can obviously just review the price again and give you a different strategy maybe. But I would say, get yourself settled, make that decision in the back of your mind of who you want to go with, an idea on your price, and then obviously Christmas trees and decorations are going to be going up very soon for some people. I know there's a lot of people out there that like to put them up far too bloody early. So you might not want your pictures with Christmas trees in and stuff, but I've had some people that have asked if they can have their pictures done in November, back end of November, before that, in preparation for January. Because again, they'll still be seasonal. Obviously, if there's snow, then that's a different question to a certain extent if they look bad, but they're still going to be within season. So if you're ready to be prepared for it and then pull the trigger, Boxing Day obviously is a myth, in my opinion, of activity, because most estate agents are closed, but there are more properties that come available between Boxing Day and January. So
I suppose as well, I'm thinking of from a buyer's perspective, more properties available, but also more people wanting to buy.
Yeah, levels.
So we typically have more than one offer on a home. How do we pick that offer if they're the same level? And then that comes down to that level of detail with, I've got my mortgage broker, I've got this in place, this is what I can borrow, all my checks have been done. And I suppose that leads back into you guys and actually being prepared and having those conversations, because they can take some time as well, can't they? Making sure that your clients have everything in place to seamlessly get their mortgage.
I think the only thing I can sort of think of with December specifically is a lot of people do get paid maybe like an annual bonus, for example, in December. So if someone has a pretty firm idea of what that's going to be, and all we've got to do is wait for the December pay slip, which might come early. So some employers pay their employees before Christmas, don't they? Then that can help us as well, in terms of if that's going to be a decent, juicy bonus and we're actually close to being able to prove what it is, then maybe we can put that in the affordability calculator. Whereas, the way Ves and I always kind of go about things is we don't like to use any kind of speculative bonuses coming up, because until it's been put on a pay slip and actually been paid, the lender's not interested in looking at it. So we try and steer away from clients saying, I think I'm going to get X amount in 3 months' time. It's just like, well, what if that doesn't happen? Whereas, like I said, if we know, you've got a Christmas bonus coming up, it's pretty firm, we can put it in the calculation, then that's always a good time to do it, really. So that's the only thing I can think of for us that would change in December specifically.
There's certain things that just take time to fix. So I'll give you a couple of really good examples from conversations I had only yesterday with people. One actually the day before was we noticed an error on her credit report. So there was an error made by a particular lender that needed to be corrected. So that means having requesting a notice of correction, and that process can take a few weeks, potentially a little bit longer to sort out. But it's very much something that needs to be sorted out in this case. Otherwise, it looks really, really bad and is going to impact the kind of number of lenders that are interested in having a conversation about that particular case. So sometimes these things take a long time to fix. So if you're thinking, right, this is the whole plan in our heads, it's all sorted, January we're going to press the button, my advice would be just sense checks everything with somebody in the industry, whether it be a mortgage advisor or an estate agent, ideally both, because you also need to find somebody that you like working with before you're ready to go. You don't want to start the new year looking at that whole process when everybody else is booking in valuations and you're having to forward book. You want to have everybody lined up, but get some advice, because it gives you a window. If you're thinking, right, we've got a month and a half, 2 months before January, you got a bit of time to fix whatever's wrong, or actually optimize your application, or like Tom mentioned, actually work out, I need to maybe just double check exactly what my bonus is going to be this year, because I might be able to use that. So my advice would be to just have a look around, figure out who you're going to use for your mortgage, for your sale, and check your credit file. Check your credit file.
Do you know what? I can think of 4 pretty cool people to chat to if you need any help, right? I'm sure we can all help.
A few spring to mind.
Only four. Only 4.
Just us 4. Well, the thing is, honestly, if people are watching this and you are thinking of moving next year, like, drop us a message and get in contact. We can put you in contact with these 2 fantastic guys to give you a hand. And Neil's cool question. Go on, Neil.
Well, it was more so, as I said earlier, when we were just backstage, dare I call it. We're having conversations with a lot of people now, again, similar sort of question to the last one in the sense of timing, but solicitors are obviously shut down over Christmas, so it gets quieter on the process side. But I know, shame on them. I'll try and get some winter sun, I won't lie. But does Christmas slow down the mortgage process? Does it slow down the application process? Does it slow down anything to do with them getting their offer or anything during that transaction all the time?
Short answer is no. And I think psychologically, it weirdly speeds the process up, because the lenders are open between Christmas and New Year, whereas a lot of brokers, for example, might have gone on holiday or taken a couple of weeks off. So we could put an application in on Christmas Eve, for example, take a week off, but that actually will be looked at while we're away. It's interesting. And yeah, I used to work at Nationwide Building Society, literally on the tills. I worked there for a long time doing a variety of different jobs. Between Christmas and New Year is one of the busiest weeks or it used to be, when the high street was a little bit different from what it is now. It used to be a very, very busy few days. Like, you'd see a lot of people coming in because I don't know if they're doing shopping between Christmas and New Year, or just they got time off, so they're coming into the branch and just actually making some financial decisions in that time, because they've got the time to do it. So yeah, the lenders don't shut up shop. No solicitors do, and dare I say, some mortgage brokers do. I don't know what Mortgage Tribe's doing between Christmas and New Year, but yeah, the lenders, the underwriting process actually continues really smoothly between Christmas and New Year. For off the top of my head, I don't know of any lender that closed down between that time. So yeah, it's a good time actually.
It's an interesting one because, as I say, we work 24/7 and we work through seasonal holidays or anything like that. So it's good to know that people like yourselves can still crack on. Shame on you, solicitors. Get back to work.
Ian's asked a question, which one of you guys can answer. Do you guys think it's worth overpaying on a mortgage? Even an extra £50 a month, effectively the cost of a Starbucks these days. Oh no, I think you guys could probably give the technical answer. I personally think it's overpaying if you can, worth doing. So what do you guys think on that?
Yeah, you're not going to like the answer because it really does depend on the situation. So sometimes it's really worthwhile, and other times you might be better off just holding off. I mean, a really, really basic example of this is if you're still one of the lucky ones that took out a 5-year fixed product right before we went into these super high rates, and you got a lovely 1% mortgage sat there. At the moment, is it worth taking that money out of your savings account and paying it towards your mortgage when your savings account's probably giving you a 4.5% interest rate? Maybe not. Is it worthwhile if you can afford to do it and your mortgage is at 5.5%, 6% because you had to remortgage last year and you had no other choice? Yeah, maybe it is, because obviously those overpayments go towards shortening down the balance. They go straight into paying off the balance as opposed to interest. And depending on how the mortgage interest is accrued, and there are several different methods, you can benefit almost instantly. So if you have a daily interest accrual method on your mortgage, if you make an overpayment today, you'll be saving money tomorrow. So there are certain situations where it's super beneficial. To use a personal example, I overpaid for about 8 years on my mortgage just because I felt like I could afford to do it. And then when interest rates went up, I was like, I'm going to stop overpaying because I just don't need to anymore, right? So for me, it kind of took away the shock of an interest rate rise. So it depends. It can be kind of personal preference.
Hypothetically, it probably makes a big difference, doesn't it? I think if I talk from my personal experience, when I paid a bit off, overpaid my mortgage this year, only a little bit. I think I did £100 a month for just like 7 or 8 months before I ended my mortgage because I could do that. And I actually saw the money coming off, which for me was a nice thing, because if you actually look at what you pay on your mortgage and what comes off the bottom line, it's horrible, isn't it? So,
well, Nationwide, going back to Nationwide, they've got a really good calculator for that on their website, which will show you the potential impact of paying off £50 to £100 a month.
God, Tom, I can tell you worked at Nationwide. It's Nationwide.
But
other lenders are available.
Yeah, well, they are. But I think not a lot of lenders have a calculator or a illustration system as good as theirs on a public website, which demonstrates what it can do and is easy to use as well. Because there are other ones that have it, but I just don't think they're a bit clunky. But
so that's worth checking out then, is it, Tom? You can just go on their website and have a look at.
Yes, if you type in Nationwide mortgage overpayment calculator, you'll go straight to it, and it's really interesting. Just paying off £50 to £100 a month, what it will do.
That sounds like a.
But here's another interesting one that I've seen a lot of other people do, is making overpayments when there's absolutely nothing in your savings account. Right, because if you're making an overpayment, it's going to be more difficult to get that money back out. But actually, sometimes people need to build up a safety net for themselves. So if you're sat there with absolutely nothing in savings and no insurance policies to cover you if something was to happen to you, but you're making overpayments, there's an argument to say that actually that £50 a month could be going into your savings accounts for a rainy day instead. So even though it is saving you an interest, it might be a little bit more beneficial to just build up a safety net before you start overpaying. So there's lots of different scenarios.
Well, on rates, what's going on? I had a Google earlier on, and it seems to think potentially the base rate they think might come down again to, because it's 5% at the minute, isn't it? So it might come down to 4.75, and there's a lot of talk that potentially rates will then potentially come down towards the start of next year. Do if you're betting people, would you think the rates are going to come down? Start with you, Tom.
Oh, thanks.
Right. Don't worry, you're not telling what's going to happen.
Well, nationwide.
Yeah. Well, I mean, the fixed rates don't necessarily reflect what happens to the base rate. That would certainly affect trackers and variable rates. Fixed rates, you want to keep an eye on swap rates to sort of try and predict that. All I will say is probably a month ago, to get less than 4%, you had to fix for 5 years. Now there are a few 2-year fixed rates that are below 5 years. That below 4%. Again, you need to have like quite a big deposit. It's a sort of 60% LTV bracket again that we quite often are referring to, which are these headline rates, which is why Ves and I don't always like talking about, what's this rate, what's that rate, because I could say I can get you 3.5% on a buy to let right now. Okay, great, but you need to have about 50% deposit, and it's probably going to cost you $5,000 to set up. Is that even the best thing for a client? So we steer away from the headline rates a little bit, but like I said, I think it's the gap between 2 year and 5 years feels like it's closing, which is good for everyone, I think.
Mm.
Another question actually from Ian. If Donald Trump gets into power, do you think we'll have a positive or negative impact on property and finance globally? I think it'll be positive.
There you go, vote Republican.
I just like it was a great 4 years watching him do stuff.
Has it been only 4? You can't get that guy off your screen. Honestly, I think ultimately people should just focus on their own finances and figure out what's best for them in this time. Like, it's halfway across the world. I don't. Ultimately, last time he was in power, I don't remember what happened to mortgage rates. So yeah, figure out what's best for you.
I think it will have a good impact on crypto. So if you've got money in crypto, he's good for Bitcoin. So not that I can tell you to invest in Bitcoin, but it'll probably go up. And Rob's asked a question as well, guys. You can answer this. What's the difference between types of mortgage brokers? I suppose the question I'd ask is, what different types of mortgage brokers are there?
Good question.
I suppose it depends who's calling himself a mortgage broker.
The interesting one is like the one that I always say, sorry, Tom, is are you talking to a broker that's tied to using one particular lender or a small panel of lenders, or are you talking to somebody that's got access to the majority of the market? Because if you call up your bank and you ask to be put through to a mortgage advisor, they're going to be able to tell you about what products that your bank has. They're not going to be able to give you advice on what else is available, even if there are better rates on the market for you. Whereas if you, for example, call up Mortgage Tribe, well, we've got access to over 97 different lenders via Legal and General, Mortgage Club, and another handful directly. So in that respect, you're having two very different conversations. So it's important to figure out initially are you talking to somebody who has access to the majority of the market? That is a big one. So are they a tied advisor or are they not? So that would be my interpretation of that question. Rob, I hope that's helpful.
You're going to laugh, but I'm going to mention Nationwide one last time here. when I worked at Nationwide, you would never ever hear it. You would never. No, but the point I'm trying to make is you would never hear me back then refer to myself as a mortgage broker. I was a mortgage consultant or mortgage advisor, whereas broker is much more. I'm trying to broker a relationship between a client and a lender at the end of the day, and having the different relationships with the lenders we've talked about it many times, in my opinion, helps a lot. So that's probably just one thing. If someone calls themselves a mortgage consultant or advisor, that might be because they work for one lender, which is absolutely fine.
But I've got something I want to share with everyone as well quickly. Let me just grab it.
Oh, yes.
Plugging it.
What is this?
Make sure you show the side bit. The side panel has the wow factor, I think.
Yeah, I haven't even done this bit yet. So open up the side panel.
There we go.
Oh, look at that.
Look at that. That is quality.
I was at Tesco earlier using them. So
these are our new Mortgage Tribe bags for life.
Put it on your head, Dan.
What did you say?
I said, Neil, what's our plan with it?
Oh yeah, got a great plan. So if you didn't already know, Shinfield has a new Lidl opening on the 14th of November. It was meant to be end of October, but it's obviously been pushed back. So we've decided that we're going to be kicking around on the 14th, handing out mortgage tribe bags.
We're going to be giving out free bags for life, aren't we? We've got a lot to give away and do. What is there anything exciting in the pipeline to do it, guys, or is it they've only just arrived, haven't they? So
how many have you got?
About 2,000. And if you want to know what 2,000 bags looks like, it was like a pallet and needed basically a forklift truck to get them in the office. But they're actually really good quality, and the color scheme of them is just really, really good. So I think they'll stand out well. And we've already had a few clients. I literally, if I'm banging my own drum, did a good job for a client the other day who was really pleased and gave me some really good feedback just verbally. And I said, would you be kind enough to do a Google review for us? And he said, I will, but can I have a bag for life in return? I said, you didn't have to. They're genuinely good quality. They look really quite cool, I think. And we just thought, I've never known someone turn down a bag for life. What's a cool thing to give out? Avocado had their hoodies. Survey Network had their drinks. We've got our bags for life. And
there was a lot of anxiety though, Tom, wasn't there? Because when we ordered these, it was impossible to really have one made and so we see what it looks like. So we had to order 2,500 of these things and hope that they actually
not knowing if they're going to be any good or not. Yeah.
And it took such a long time to arrive.
But they're genuinely like quite cool, for one of their words, like as cool as bag for life can get. And I wouldn't put my stamp for approval on something willy-nilly like a bag for life, because I know people take that seriously. So we're quite excited.
Nice. I still need to get my hands on one. Can I have one, please?
I've got a box in the car, Neil. Don't worry, I'll drop some around later for you.
I'm terrible with bags for life though, because I always go into the shop and forget them, even though I've got a bag.
No excuse now, Neil. No excuse.
It's going to be
definitely bags for life. I've got about 400 bags for life that I keep buying, but now I don't need any more. I've got these.
Yeah. Solid bag for life. Nice. Yeah, they look smart. I like them. Nice.
We're approaching half an hour, guys. So I think really good chat. Answer some questions for people, and again, if people are watching this in the next couple of weeks, start to think about your questions. We're more than happy to try and answer them. We want to talk about things that are going on, and equally, if you want to get prepared for Christmas and for next year for buying, now's the time to start speaking to us.
Can't believe C words today.
Well, mate, you're almost in November, aren't we? So the year is basically done.
November next week, isn't it? So
yeah, that's it. So enjoy your evening, guys, and thanks everyone for watching.
Cheers, guys.
Thank you.